afternoon. This is Tim with BIS Commodities, taking a look at the week in review. Let's start and see where we close for the week. Starting over on the grains, corn. March corn closed down 5 cents for the week at 346 and a quarter. March beans down a little over 10 cents at 960 and a half. Down 10.5 cents for the March wheat as well at 420 and a half. Cattle market a little weaker in the week in the February contract, down $1.87, 117.37 was the settlement price. February hogs 71.57 the settlement price. That's up 15 cents on the week. It looks as if the dollar is going to close lower this week, still right around that 90.73 level at the time of this broadcast, and crude continues its trending higher. Trade at 64.42 as we speak. The big thing in the grain markets this week was the reports today. That was the quarterly stocks report and the monthly supply and demand report, and it's one of the more anticipated reports of the year. Not only is it a snapshot of how much corn and beans is in the country, it also incorporates the final production numbers for the year on the S&D. So taking a look at the corn S&D, we did see a push up in yield. We did see corn push up another bushel, actually 1.2 bushels up to 176.6 bushels. We did see them lower the acres, 400,000 acres. That gave us about a 26 million bushel bump in production numbers. They played around with the residual number a little bit, reducing it 15 million bushels. That gave us a total carryout bump of up about 40 million bushels at 2.477 billion bushels. So not a big surprise there. All the numbers came in pretty much in line with what the trade had anticipated for the most part. The stocks number as well came in line with what the trade expected, 14.6 billion bushels. The average trade guess was 14.58. So again, nothing big earth-shattering there. When you take a look at the market today, there wasn't much of a change there as well. We're still kind of stuck in that grinding lower path. These numbers today certainly doesn't give the market enough oomph to push us either out of this range that we're currently in. Taking a look at the soybean side, quarterly stocks came in at 4.39 billion bushels. That was down just a bit from what the trade anticipated, which was a 4.43 billion bushels. And that might be because we did lower our production numbers a little bit. We did see about not quite a bushel drop in the bushels per acre, down about 0.4 of a bushel, 49.1 bushels an acre. We left acres alone. That did lower our supply 33 million bushels. Played with the crush number. We upped to 10 million. We did lower exports 65 million bushels. This is what the trade was looking for. We were expecting reduction in export sales. That gave us a total carryout of about 25 million bushel boost, around 470 million bushels. So we're up on that. Now, we did see a reaction upon the release of this report today, primarily due to the first thing that came out. The computers traded the yield reduction. We've seen a quick pop up, but we did see it settle back off. Now, interesting enough, with these numbers in place, they weren't considered bullish by any means. We were looking for a bearish report. It may not have been quite as bearish as what we thought, but we did see a nice reaction in the January or in the March futures upon the close today, that we did make new lows for the day and the week, only to close higher. So we did see an outside day close up. And when you take a look at where we came out on our commitment to traders report, we've seen that the managed funds added not quite 8 million or 8,000 more shorts to their short position. Seen a little short covering on the close. And as we take a look into next week, we're probably going to be focused on that shortened week on still, will we see a little more demand increase or not? We'll still keep an eye on South American weather, which at this point, the trade told us today they weren't going to adjust the production numbers all that much coming out of there. They did increase Brazil's production, and we did see a decrease in Argentina's production. All said and done, the stocks number worldwide really hasn't changed all that much. We are getting into the meat and potatoes part of the growing year down there. Early beans in northern Brazil are being harvested, replanted to the second corn crop, safrinha corn crop down there. But we'll keep an eye on that. We'll continue to keep an eye on demand, and that'll probably be the biggest and focus as far as corn and beans are concerned next week. When you take a look at the livestock markets, cattle had a sell-off to start the week, and that was following last week's hard sell-off, where we did close a little bit lower on the week. Cash traded very early in the week, 119, 120 trade for the most part, and some of the major feedlots that kind of set the tone for the week. We did hold the bottom end of the charts for the most part as far as the February contract is concerned, and that'll probably be what we need to take a look at next week to see if we can hold the bottom end of those charts, and we'll probably continue to keep an eye on the cash and the boxes. Boxes for the week actually closed down about $1 or so in the select contract, right around that 2060 area. And that'll, so as we go to next week, that'll probably give us some early direction, but there is some concern here as well if we're going to start to see a cattle back up in the countryside, yet to be determined. We are seeing slaughter weights increase from a few weeks ago during that cold spell. Weather will be important as well here to keep an eye on the next couple weeks and or month as we keep an eye on this cattle market. Taking a look at the hog market, we made some contract highs this week in a lot of months, mostly the deferred months. Even though we did only settle a little bit higher in the February contract, we did see contract highs in a lot, again, of the deferred months. Cash was up significantly this week. $6.50 was the average cash price increase in the week. Interesting enough, we've seen the cutout pretty much steady on the week, so the packers are getting squeezed here a little bit. We've seen a lot of volume on the open to start the week, and this is probably due to a little bit of a rebalancing, where we've seen some of these index funds come in and change their portfolios. Really didn't have much of an effect on many of our markets because the volume is down from years past, but we did probably see a little bit of effect, maybe more so in the livestock markets this week versus the corn market. So keep an eye on the cash hogs, the trend next week. The charts are important if we can hold the bottom side here in the cattle market. If we can hold the bottom of the side of this hog sell-off here over the last couple days will be important. And with that, we'll see what next week brings.